All right, good morning, everyone. Happy Tuesday. This will be the last pre-market call of the year. So we'll get right into it. As always, we'll go over the big picture, some of the major sectors, we'll go over some top ideas. And the main theme will be kind of doing nothing for the last couple of days of the year. Again, most people right now, they're hanging on the couch, hanging with the family, they're on vacation. This is not really the time that most people are going to give much focus on the market. And we don't want to kind of get chopped up in kind of the nothingness of the end of the year, and until the new year kind of kicks off. So again, overall, looking at the year, we start off the year at all-time highs. We, obviously had a much more difficult trading year than we've seen in the last couple of years. At the lowest of the low, the market dropped nearly 30%. We're closing the year down around 20%. And this is a great time to compare your performance to what the market has done. And one of the main things I've tried to do this year with most of the newer members is to have one approach that matches the market, like the big picture, and then one approach that tries to beat the market. So if you look at your active account, if you've done anything better than losing 21%, you beat the market. And your passive account, I've seen members who are actually up this year on the big picture. I'm down about 6% on the year myself. But if I'm down 6%, the market's down 21%, and I'm buying the market, that's showing me the benefits of dollar cost averaging, which a lot of members are also seeing. So this is a good time to reflect, look on what worked well for you this year, what did not work well, and what improvements you can make going forward. But again, a lot of the major sectors this past week or so, it seems they're mostly forming new flags or new bases within their relative ranges. So we're seeing this, consumer staples, for example, runs into the retest perfectly, starts to pull in, and now this could be what would be, a bull flag that would start to form with 190 being support, 200 being resistance, and this new flag forming for that eventual breakout through 200. And we're seeing this in a lot of these same sectors. We're seeing the same thing in industrials. We saw the same thing. We're seeing the same thing in energy. We saw that retest. Maybe this is now this new flag that's going to form, gives us a little sneaky entry right now. But we're seeing this in all the major sectors. We saw this in staples. We're seeing this in industrials. We're seeing this in the Dow, large cap names. We're seeing this big base forming. We're just seeing this over and over, except for really consumer discretionary. This is the only sector that has really been asleep at the wheel in this recent market bounce, where discretionary is just, they want to kind of flush lower. And we'll see what happens with them. But again, a lot of these sectors, biotechs, the rest of them aren't. But again, biotechs, energy, staples, industrials, all are kind of doing the same thing, showing us this new potential flag that's forming. So I'm going to keep an eye on. Again, broadly for the year ahead into 2023, I still think that we start to drift back towards these highs. I do think we see probably SPY 500 by the end of next year. So end of 2023, this is where my target is. Again, you're starting to see a lot more of the CEOs and the talking heads talking about how we need to see a recession and the market needs to go lower. And also when you start to see everyone kind of having that same narrative coming from the top, it's usually kind of the worst is often. And just like when the market turmoil things come on CNBC, we're often at the worst of the worst. So again, I still think that we have a much better year. We've had this shitty year. Again, we tried to manage the expectations this year, but saying it'd only be the next couple of months, it really was the full year, which none of us wanted. And maybe this is a year that the market has to base, and this, there is a significant range. If this is going to be like we've seen a lot of these sectors, like we saw energy retest, a lot of these sectors retesting. This could be a year where the market just trades within this range. And this kind of why my target is 500. And the SPYs, if we do trade range bound for this year, and this is the range, 340 to 480, first off, this is a massive range. Just for that alone, forget new highs, just to trade in this range is huge. And that's why, again, my target is up here. Because sometimes when you get to those retests, sometimes you get that little push higher. And that's, again, why that psychological number of 500 is kind of my target, more so expecting this year to be more range bound, us to get back towards highs, to kind of have the narrative be 2022 was a bear market, was a horrible year. 2020 was a nothing year. They get back to the prior highs, but in reality, there was a lot of opportunities in these pockets of time in 2022. And also, I think if we trade within this range, again, this is a huge, 30+% range that is huge, where the headline could still be the market did nothing for the last 2 years when there was plenty of action within that. So that's kind of my outlook for the year ahead. It's just we continue to grind up. Again, we can still test a new low, but I think overall the trend is going to be, heading more for this 500 magnet than heading towards, 250 or pre-pandemic levels. Again, for top ideas, again, I'm with Shake on just kind of keeping cash for the end of the, going to the end of the year. Again, recapping a lot of your trades and your game planning for the year ahead, updating financial plans. That's kind of my goal for this week. Really not much on an active trading standpoint that's really jumping out at me to kind of put risk on. So with that, Heaven, I'll pass over to you. If you have any top ideas, other than, again, your cat looks great. It needs to.
Why are you taking my spotlight away? I'm over here trying to share my stuff. But yeah, this cat definitely like number one on my list. Nice shakeout on Thursday and just right back to that resistance area. The weekly chart is just undeniably strong. You look at the overall market and this thing is just like massive move from support, just flagging at highs. Like there's nothing to hate about this chart.
Mm-hmm.
Now, it does need the wind under its sails, aka the market, to kind of participate. This week being a statistically lower volume week. Do we see a strong breakout? I don't know. Is it one of those names? It's like, is that the only thing that's going to work? So it just attracts more buyers into the end of the year here. So I'm definitely keeping a really close eye on this one, right around that 240 area that you have marked out. Another one I'm looking at is Home Depot, which has sort of been basing all year in comparison to the market downtrending all year. So we see that, that red line that you have right there, the 340 area is pretty important. And last week, it looks like it's kind of trying to put in a higher low and pivot. You don't have the moving averages, but it's holding the 50-day like perfectly. It tested it twice last week and it held. So looking to see if this can kind of curl back over and kind of form this little sneaky buyback through this like 320 area for a move to 340, and then hopefully or eventually a break above this massive base. Or if it rolls over, we see a weak end of the year and this rolls over, I wouldn't mind taking it to the downside as well. I think there's decent risk reward on both ends there. Another one that I'm looking at on the weaker end is NVIDIA. So big push to the downside on Thursday and then very weak recovery on Friday compared to the overall market. So looking to see if that support breaks this week, or again, if this holds, we could see a strong reversal there as well. So decent risk reward on both ends. That's kind of what I want to look for the most part. Let's see what else. We got some member ideas here. Abby is looking at TDG through 623.55.
Okay, a little different than what Abby, I feel like a little different than what Abby typically looks for. I feel like she's been really big on those, like support buyback, really contra trend buys this year. But this looks great. It's the was it 628?
She's looking at 623.55, basically above Friday's high.
Oh, Friday's high. Okay. Yeah, if she's keeping it super tight, definitely see what she's looking at here. This is 675 in time. Looks really good too. Yeah, it looks great.
Yeah, it looks solid. I like it.
Definitely alert worthy.
What's that?
So definitely alert worthy.
Yeah, definitely. I'll throw it on the alerts. Then Kush had said, screw your week off here. I got charts for you. First one is MEDP, MEDP. And he's going to buy this one through 213. Kind of like a low cheat level here, which I like it, but also it's 4 days up, which makes it a little tough off that support because your real out is down at 200, which risk, percent wise is not huge, but it's again, last week of the year is like, does everything really come together here for that sort of trade? I guess we'll see.
If this was to like, if this gave you, pushes through here, comes back in, and it gives you like 1 or 2 more days, you kind of get it a little later, probably more so. I think though, in reality, this like earnings flag that this name is in, it's probably going to be in this pattern for longer than we would assume. That you're probably going to be better off just waiting. Earnings end of February. Still some time, but again, this is kind of the range. I'm going to change these colors to red and green. So like this is, you got resistance up here at 230. You have support here down at 200. This is going to be pretty much what you're trading within, probably until the end of the quarter. I would imagine that it's probably not going to break out of this earnings flag until next earnings, if it was going to. So if you're going to trade within that range, the risk reward makes sense where you can buy 213 versus, I guess we're taking a low day or prior low day, and you can get into the 220 area. But maybe it's worth it. But I think that you have to just be aware that this is going to be, this is the range you're trading within.
Yeah.
And I wouldn't expect this thing to just massively break this all-time high of this 230 area just because, we just get in this first time.
Yeah.
But,
I think once we eventually do get that close over 230, it'd look a lot better.
Yeah.
You just avoid getting chopped up in this range. Next one he's looking at is Coco, COCO. And he's looking at this one through 1376 to be exact. So I guess above last week's highs.
This, if you're gonna do, I think you just buy 14. The couple of cents, again, it's gonna, just buy by the figure if you're gonna buy 14. Really though, probably the 16. It's probably, so again, this, if you buy 14, best case you're gonna get a move probably to 16. This is why, again, I dislike these cheaper names. Again, this is a recent IPO, so it's a little bit different. But in reality, if you're buying 14, you're giving it versus 12. Really, best case is you're probably going to get a short-term move to 16. So you're risking 2 to make 2. Even if you risk $1 here, keeping it super tight, it's still kind of 2 to 1. And this is just why we try to avoid these cheaper names, because your real risk reward often is much tighter. But again, this I keep more alerts for this through 16, even 18. Through those IPO highs, much different of a setup than trading within the range. So
yeah,
you can find it super tight, but
yeah, it's up. If you look at a weekly chart, it's up 100% in 7 weeks and has not really taken a break. So I think to really make this look better, I think it needs some sideways for a couple of weeks to really catch a good breakout with like a strong support, because this could easily fall right back over. It's a thin name to 200K average volume, so that's also something to take into consideration if you are buying this.
Yeah.
The next one he's looking at, we had this one on watch a little while back, and it's back now, ADM. So this was a good lesson here, because I remember that day that it dumped really hard, right? It was right at resistance. We were looking to buy this through 98. It did not break 98 and it sold off. And I remember some people were looking to buy this basically the next day. And this is, this shows exactly why when you see a massive sell-off like that, it's usually for a reason, especially with no recovery at all that same day. You probably want to wait a little bit until this kind of sets up again, because like, even if you did buy the next day at 90, 92, it's up $3 since then, and it's just chopped up, for the last month. So, but now it's starting to look a lot better. I think this makes a lot more sense to try and buy it here through this like 94, 95 area, for a move to 98, and then possibly, this is like the 4th attempt through resistance. So maybe this time it actually goes. But way better than just trying to catch a falling knife the day after a massive sell-off. Yeah.
Even this one gave you those couple of days. I know one of the members specifically asked, it was like this day, and it was like, no shot. Even the next day, like when you get a couple of these days, like this day up, like that's, again, it hasn't really done much since, but that I can get behind, because at least you're trading it, like you are not anticipating what the low is, what the low is. Where this day, I forget which member it was, you have no idea what this thing's going to do. the next day, if this was like two back-to-back bearish couple days, like you're going in blind, or at least after a few days, even now, like, okay, you buy 94, you're out 92, or you give it really versus 89 area. Like, where to get out, where trying to get involved is first up disastrous day when you're expecting a breakout. It's just not worth the effort. So with the 100% on waiting for this, and this again, through 99, this looks, you couldn't ask for a better blue sky breakout, especially with that shakeout, because now this shakeout shook everyone that was waiting for this. Like, even like Kush's Coco example, it was super tight these last couple of days, and it looks just like right here, where it's, oh my God, it's like a risk, a couple dollars here in this super tight flag. It looks amazing, and it pukes. And everyone for the last month that's been sitting in this with a super tight stop is all getting pushed out. And now, you probably have that crap coming back in. So it's good to see the shakeout. And same with even that Coco. If it does get a dirtier shakeout, maybe that's what you need, what the name will need to push up to 16 and 18 and higher, where right now it's too tight that no one's that excited or chasing to get into it.
Yeah. Next one he's looking at is box. Looking at this one through 31.
31 is right here.
Yeah, just above Friday's highs.
Yeah, I don't think like the above Friday's high is going to be really that significant. This 30 half area definitely seems to be somewhat important in the short term, but this is just, I just bias for 32. I don't think you need to kind of cheat in here. And again, this reminds me, I lost like 5% in this wing, and this reminds me of wing, where I was just kind of too early to it, and it was like me buying a random prior high a day, like nothing significant. So wing again through 170 in time, through 180, blue skies, looks very good. I'm trying to find like a little sneaky entry. Wing comes into, and this little earnings flag comes into support. Give me a second. So here's support 145, support holds, comes back in this day, tests it perfectly, and either you would expect a breakdown or it's a hold in reverse. It shakes out this day, and I just want to simply buy above, in this example, Friday's high day. But it's not that significant. It's just that day's high of day. There's no real relevance other than me trying to let it shake out and then buy back up through it to get a good price, good entry.
Right.
So I did that. I bought 150, but again, it was a random level, wasn't anything significant. Next day it pukes, and I lose 4% very quickly, when it was kind of not a dumb trade, but it wasn't as high probability, where WFRD was super easy. This O'Reilly was the easy one. And then like I lost 4% in his wing. And it was like, that was just dumb. Where, not saying these Coco names, the other ones are not good. It's just the Friday high day is not that significant. It's not that relevant, where this wing, this 170 area, this 167, even 160, these are more defined than just some random prior high day. So if your setup is just, especially this week, just buying Friday's high day, and that's the only significance to that entry, probably just a pass, because you don't need to lose. Like for me, like this was, lose 4% was just stupid, that I could have just avoided.
Yeah, that Friday candle looks better than the one that you were looking to buy through, just because it actually shook out that support on Friday and it closed back above it, like this last Friday. That looks like a better support buy than the one that you bought, because of the way that it broke support, broke Thursday's lows, and then still closed higher. That's interesting. But yeah, I think, and this is a question that I get often, is like, how do you determine whether to like build a position into something versus just taking the full position on your trigger? And I think this box is a good example of that, where where the support is, but you don't really know, like, the breakout is at 32, but I also see like that descending resistance level where you can kind of buy the break of the wedge. So this would be a scenario where I would look to maybe buy a quarter of my position through that 31, And I know that I'm buying instead of really worrying about where my entry is, I'm buying versus 30, 45. Like I'm buying versus that support. So I can start to build a position, not necessarily because it's going to break out today, but I can build it so that when it is ready to break that 32, I have, my average position is more around 31. I have a little bit more cushion so that, because $2 risk on a $30 name is pretty high. But if I'm in buying a little bit, as long as it holds support, I have half the risk. And then I can kind of be ready for that eventual breakout later on. So this is a good example of that. Just instead of loading up one time, you kind of just buy little by little. As long as it's proving itself to you, you can add a little bit more and comfortably take the trade.
Yeah, definitely agree.
And then Kush's last chart here is PRVA, which he's actually looking to take to the downside.
Okay. All right. Yeah.
No, he's not going long. He's looking to short this through 23. He actually put a picture of the chart flipped, and he said this looks like an amazing long if it was flipped. And I couldn't agree more. I mean, this thing is getting super beat up, bear flagging at lows. When I remember you were mentioning this, I think last week, about shorting the weak stuff and not trying to short the strongest names in the market. So this is a great example of that, I would say.
Yeah, 100%. Yeah, I was like, when I first looked at that, I was like, damn, he wants to buy this? This is horrible. But yeah, definitely agree. Again, you want to short, this name is, it would be really plus if it was breaking down to this 18, because this is like going to be, is it all-time lows?
All-time lows.
That would be all-time lows. So that, like, down through 18, this thing's dead. Like that's like but this one too, again, we saw this bear flag here. We're seeing this next bear flag. Again, it's a weak name, recent IPO. Again, and more so with these recent IPOs, you start to get down here, just like when they get onto their all-time highs, it's a high probability trade to the upside.
Yeah.
When they get towards their all-time lows, it's also an extremely high probability trade that's going to get destroyed to the downside, because now everyone who owns this company is screwed. And that's where you get a lot of that panic selling. You get the panic selling down here. You don't really get that up here. This is like, oh, it's a shakeout, it's a correction, it's bear market. Oh, okay, now we're dead. So definitely with him on this one. Again, it's not like he's going to short this and hold it for the next short down to 18. Again, shorts always look super easy. Like, oh, if I shorted 40 right now, I'd be up, 50%. But no one really is shorting and holding these. No one's long, trend trading things short. Usually, you get that few day move. So, this one again, you definitely have a very tight out here. If you're wrong and this thing holds and rips higher, you're out. You're out to 24. You're shorting, 23, risking $1. This I'm with them all day on that. For that move down to probably 20 is probably like the realistic move. But that, again, when you're short, you just keep, like, we trail our trailing stops on the way up versus the pivot low. This you're just going to trail on the way down. So it'd be 24. You bring your stop down to 20, and then you're trying to cover into that weakness. Where this is a different case where you can have some, like, I try to avoid the limit sellers on the way up. I don't like to cap my upside, because we don't know how high it's going to go. On the downside, though, you're being much more quicker with those trades, where I would have those limit orders down in front of the figure. So I'd have that limit buy order at 20.05 and the limit buy order at 19.55, like in front of those things on the way down, to capture that, so you don't get stuck in, like, when the short turns, you don't want to be stuck in that getting stopped out. You just want to have that stop in to get you out if it does kind of turn higher.
Yeah, and usually because of that is because the stocks are usually hunting for stops. So the people that are long the name right now, right, they're buying this loser, they have stop losses in certain spots. And to the downside, it'll sometimes, like, because we obviously know where those orders are, like the big institutions do, it'll trigger those stops and then bounce. So that's kind of why you want those limit covers on the way down, because it can aggressively come down to that, $20 and then just rip back up. So you don't want to miss those stop hunts.
Even like this day right here, it's like this thing got smoked. This is what I'm talking about, like, when you're short and you want to have those limit orders down in front of those numbers, like, figures. So it's like this low a day was 25.23. So if you wanted 25 perfectly, it's like you gave back this as a rip the next day.
Yeah, literally 20% move the next day is what it took. So it's, you definitely don't want to give that all up. There's a high probability if you didn't sell on that down day, you're getting shaken out on the next day when it goes back above 30. So you definitely have to take profits and base hits. I mean, this is same thing that Shake's been preaching for quite a while now, is just looking for base hits. I mean, this one was if you did short that 32.50, you got a really nice move over 4 or 5 days.
Mhm.
But yeah, that's everything I got on my end, Ben.
All right, guys. Well, you guys have a good end of the year. Again, expect January 1st to be, a somewhat positive day of the market. That just everyone's very excited for the new year. The gyms are going to be packed. We'll be back focusing on the markets again. But take these last couple of days to compare your performance on your passive accounts to the overall market, compare your active accounts to the overall market, and game plan your goals kind of for the year ahead, and try to keep the cash in silence for this shorter week that we're gonna have.
Yep. Review your trades, look at your journal, and then set up actionable goals and steps you can take to achieve the things you want next year.
Yeah. All right, guys. Well, see you guys in the chat, and have a good day.
Later.